I'm going to share my screen. And can you guys see that? Thumbs up? Okay, cool. All right, cool. All right, so, let me just make this a little bit bigger. All right, cool. So I want to say welcome everyone to the Baltimore Stock Market Meetup group. This group started on Meetup, but I've definitely extended invitations to people who are not part of the group. But it would be awesome if you could join the group because that's where I send out most of the messages. I've been running the group since January of 2021, and we have about 330 members currently. And I don't discriminate; it's open to beginners, you know, people all across the spectrum, from advanced investors to beginners. Everyone's welcome. All questions are welcome. So please spread the word. We are virtual for now. Would love to have an in-person meeting now that it seems like the pandemic is over or almost over. So I'd love to have an in-person meeting because just the vibe and energy is so much better when you're in person. I am Coach Mike, the founder and CEO of Walk On Consultants. And what I do is I teach individuals how to get started investing in the market. I do some online presentations. I have a YouTube channel, and I will make house calls if you need me to make a presentation to your family or school or group or church, things like that. But certainly my link is there if you want to book a free consultation to see if I'm the right guy for you. I always start off the same way, and I know some of the old people who have been here before may be getting tired of hearing that, but this is for the new people, that an investment in knowledge pays the best interest. I really want to encourage to get educated before you invest, you know, learn before you invest. That's the way you can avoid some mistakes. It won't prevent every mistake, but it will certainly help you limit the mistakes that you make. And so today's theme is, are we going to buy the dip or are we going to sell the rally? That's really what I want to talk about today. Now, we've been, I think, conditioned to buy the dip, right? Where everyone knows, even people who don't invest, know, buy the dip, buy the dip, buy the dip, because the market's going to go up. You should buy the dip and get in, right? And before I did this chart, I didn't even know that this was actually a chart of Bitcoin from last year. But, you know, we talked, me and Calvin talked earlier, right? Bitcoin was 2,000, it was 9,000, it went all the way up to 68,000 and is now back down to like 30,000. But we've been conditioned to buy the dip. And, you know, but we don't know what happens when that doesn't work. So buy the dip has worked for 3 years in a row because the market's been going up, up, up. I mean, it's what happens in a bull market. You couldn't go wrong if you bought the dip in 19, 20, or 21. But in 2022, things change. And so I say the bull market's ending its 3-year run. A lot of different factors. You know, the Fed's raising rates. They've raised it twice already. I think they're going to raise it at least 2 more times. We got the war in Ukraine, which is putting a strain on agriculture. We got supply chain issues. I don't even have to mention inflation and gas prices and everything else that goes along with inflation. And the economy is just really kind of slowing down. So I don't think 2022 is going to be anything like the last 3 years at all. Not saying it will be a loss, but certainly will be probably flat or negative, in my opinion. So I looked at the stats for month by month. So obviously in January, everything was down across the board. And the same thing in February. And then you got March, a blip up, okay? But they've resumed this downtrend in April and May. So this is what you can see the clear difference from the last 3 years till now. So year to date, the Nasdaq's down 22%, S&P down 13%, and the Dow down 9%. And so that down 22%, I guess, goes into the definition of a bear market, which is a drop of 20% from the high. Questions? If you got a question, you can come off mute and ask me. But so what's happening now is what I call, and a lot of people call, a bear market rally. So before, you were buying the dip, right? The market was going up, it dropped, you bought the dip. It's going up, it dropped, you bought the dip. But now you buy the dip and it dips some more. And so you're like, what do I do? You're panicking, everyone's panicking, I don't know what to do, I'm losing all this money because I've been conditioned to buy the dip. But in a bear market rally, I think you want to sell the rally, which was hence the theme. Do you buy the dip? Do you sell the rally? I believe in a bear market, you want to sell the rally. You don't want to buy the dips. This is what happened to a lot of people that I speak to. Oh, you said buy the dip, right? Yeah, you bought the dip, you bought the dip, you bought the dip. And as you can see, it just keeps going lower, right? So a lot of pain going on right now from people who have been conditioned to simply just buy the dip. And I'm sure I'm touching on a lot of feelings right now. You guys don't want to say it, but when I finish the presentation, please come off mute and give me your thoughts and be honest about which are your worst stocks that you bought. So the cure, in my opinion, is to have a diversified portfolio. Not everything is going to go down. It's true that I think that we've been throwing the baby out with the bathwater. Almost everything is down. Good companies, bad companies, people just indiscriminately selling everything. But some things are up. Even though the market's down, some things are still up, and you'll see in the next slide. So what is up is energy. And by energy, I mean oil and gas companies, up 61%, as Calvin was saying, right? The price for a barrel of oil is, I think, like $1.19 a barrel or something like that. So energy companies are up, and at the bottom, utilities, because even in a recession or a bear market, you have to have utilities for your house. So those are the only two sectors that are up, which is why I preach diversification. You can't have everything in tech, can't have everything in Bitcoin or everything in consumer discretionary. You got to have a diversified portfolio. So energy has been up, and so have utilities. So as I mentioned, energy companies like ExxonMobil, Chevron, ConocoPhillips, and so on, it's the oil and gas companies that are doing really, really well this year. And we all know because we're spending $5 a gallon at the pump. So that's the sector we should have been in. And when you have a diversified portfolio, what you can do is you can rotate from one sector to the other sector. You can sell something and buy something else. You don't have to keep everything in one sector. And this is why I preach diversification. So what do? You monitor your portfolio. You got to be a listener and a reader, follow the news about the market as a whole, but also that stocks that are in your industry. So if you're into tech, you follow the news in the tech industry, whether that's software or hardware or something else. You can set alerts on your phone to get you a news alert that something happened about your company. But you guys know that every single quarter, these companies have to report their earnings. And now Target just came out with a report that's saying that they're reducing their estimates going forward. They have too much inventory building up because people are not buying the way they were buying before. So it's something you got to really stay abreast of, listening to the quarterly reports. Look at your winners and your losers, rebalance your portfolio, and of course, you can always book an appointment with Coach Mike. So that concludes my presentation. I always end it by saying that learning is a journey. It's not a destination. Even me, I still learn new things. SPACs, NFTs, cryptocurrencies, there's always something new to learn in the market. So don't be afraid to keep learning. It's not oh, I know this now. And no, things change constantly. So be a lifelong learner of the market. And with that, I am going to stop sharing my screen. Actually, I want to share one more thing. No, you know what? I'll stop and open the floor. I want to hear from the people.
Great presentation. I love the idea. Don't buy the dip, especially I was watching. I live with CNBC. I was watching it earlier today in between my drives. I have it on my satellite radios in the car. They were talking about how they expect oil to go to 150. You know, what looks like we're going to be in a recession. How all these companies, you have the analysts that want to report the truth, but then you have the CEO saying, "Okay, we got to show that we're making money."